Welcome to Markets Now. I'm Michelle Rourke with Ellison Thompson of the Money Farm, and we've got mixed trade in both corn and livestock futures this morning. And let's dig into this a little bit more. Corn and wheat seeing some pressure this morning, Ellison, and I know we've got a lot of things that we're trying to digest in terms of bearish news, including tariffs. Get us up to date on that.
Yes, it was announced this morning that those tariffs that we've been kind of waiting on, we were thinking we would get an announcement next week in regards to Canada and Mexico's tariffs with the US. And this morning it got announced that those are going to be going into place next week. So those are 25% tariffs on imported goods from the US that would go into effect and obviously have an effect on grains as well. Mexico is a big importer of our corn and wheat. We also do a lot of business with Canada as well. So I think the market's taking some of that into account early in today's session too, just of what that implies. So we were thinking again that we maybe see this announcement next week. So we were kind of waiting for this, but getting it earlier than next week obviously could mean a couple things. That yeah, they're going to get everything implemented come March 4th. Or that we maybe have a few days here. Again, we're going into another weekend with some tariffs potentially coming on. And usually weekends have been good for trade talks. We've kind of seen some of those resolve rather quickly. So I think it's still unknown what this means to grains. Obviously, the announcement is bearish to the market, but again, we still have a few days here before it goes into place. And I think that does maybe push negotiations along maybe a little bit further between all three countries.
And you've got China now. The president says, hey, we're going to double down on the 10% tariffs that we were going to impose on them, right?
Yeah, correct. China's included in this too. So they did have a 10% tariff implemented earlier with the first round. We didn't get a whole lot of talk with them or trade negotiations or anything like that, but he's treating them a little bit differently. And honestly, I don't know how to take that, but either way, they are going to get some higher tariffs put on next week as well. So maybe this too will push them along to maybe look at things a little bit differently here going forward, and maybe try to work together so we don't see it get any worse. If it is going to be at 20% next week, obviously they're still a good importer of our grains. Obviously, we're not their top buyer this time of year. They usually go to South America with their new crop, but it still could have impacts on our grains.
Right. So corn and wheat are lower this morning. Soybeans are a little bit higher despite this tariff news. And a lot of that is because of what we got for numbers out of the USDA Ag Outlook Forum. So let's talk about those more corn and wheat acres and ending stocks and lower on soybeans. Break it down for me.
Yeah, well, we got the printed proof of what we've been kind of waiting for over the last couple of months. We've been talking about big corn acres for 2025, and the market finally got the printed proof this morning. They were looking at 94 million acres of corn being put in. Obviously, they always start on the high side. We saw that last year too, and they are looking at record yields too, 181. And normally those two things don't work together. Usually when you're getting bigger acres planted, you're getting a lot of the fringe areas gaining those acres, and they normally don't account for a record yield. Usually they're what drags it down. So depending on where these acres get planted this next year, I don't see a record yield necessarily being on the table, especially when we still have the whole growing season ahead of us too. So last year we kind of saw the same thing. We were looking at lower acres, but big yields, and we saw how that kind of fell through in final production numbers at the end of the year. Came in a lot lower, and we're dealing with a lot lower ending stocks than what we were talking about last year at this time. So even with the big production that they're looking at for corn, our ending stocks on corn are going to be, based on this outlook, below 2 billion bushels. Last year we were well over 2 billion bushels on that lookout. So it's not near as bearish as what we were talking about last year on the corn side. Yes, still bearish. We got the printed proof, but now it kind of just goes back and seeing what the USDA prints for prospective plantings at the end of March. And of course, what spring weather gives us to obviously dictate what gets planted. Now on the soybean side there too, we were looking at some tighter acres. So when you're looking at bigger yields there, it's definitely more possible because you're dealing with a lot of the higher production still getting those acreage in the next year. So they are looking at some bigger production numbers, but there too, with the lower acres, overall production is going to be a bit lower. And in the end, it just leads to lower stocks. So
Right.
that's the difference there on the soybean side.
Yeah, in fact, 84 million acres of soybeans, and we had ending stocks down to 320 million bushels, which is below the 380 that we're currently at, right?
Correct. Yeah, a lot tighter outlook on the bean side. So now it'll be interesting to see what the market says about that. There was a lot of speculation on soybeans going forward here, especially given cotton, with prices there and what farmers experienced this last year, is that they might plant some more soybeans. So that could be another thing that was kind of maybe looking that we could have a bearish number, but we actually, I think it surprised the market to see them cut 3 million acres just from this last year on the soybean side. So all in all, we're looking at tighter stocks here on the soybeans, and that should keep markets well supported.
Yeah, and so you've got some spread action going on, or some reaction even. Soybeans a little higher, corn and wheat lower. We're also kind of reacting to the weekly exports in all of those areas. Not as good for corn and wheat. Soybeans maybe a little bit better than we expected.
Yeah, soybeans came in pretty good this week, but we did get lower um, sales for corn and wheat. We hit a 7-week low on corn and a 5-week low on sales for wheat. And obviously, we've had really good export sales, so a bit of a slowdown here isn't surprising, but we are going to need to see demand continue. We're still running ahead of what we were last year, and I think that gives the USDA an opportunity to increase our exports in a couple weeks at the next USDA report. The question is whether they're going to look at what we're getting for tariff news and maybe delay that again. Just like last month, we didn't see any changes on corn or soybeans on that balance sheet. And maybe that was part of it. So it'll be really interesting to see what they do here next week. I think there's an argument made to be made either way.
Yeah, and they didn't use tariff considerations at all on the demand numbers at the Ag Outlook Forum this morning either. They said ahead of time they weren't going to do that. So that really speaks to your point there. Okay, the other thing that we're running into, it's end of month, and we're going into first notice day here on Friday. And so you are seeing the market, the grain markets are trying to get that worked in with some liquidation, especially in corn and wheat, right?
Correct. Yeah. This time period between when March options expire, which was last Friday, and when March futures go into delivery, we can see the market go through a period of repricing. And that's exactly what we're seeing here. So some of it is likely due, like you said, to this period of time that the market is at right now. And then on top of it, we have a month end positioning. And I think a lot of people are just going to be watching what markets do after that. When we're going through a period of repricing, technical levels are very important because we're looking for a new area of support. And after a dollar rally, in corn and beans here, it's not surprising to see the market retrace and find a good level of support. And I think once we find it, I have a feeling that I think there's enough in the market now, even with the current outlook, that there's so much unknowns here ahead of the market that we might actually be able to find some support going into the new month.
Do you get the sense, Allison, that farmers sold a lot more ahead of this time period than they did last year when we had that huge, huge washout because we had so much supply coming at the market?
Absolutely. Guys have been very willing to make sales when we've had a good rally. And I think there was a lot of grain that was moved on this last rally that we've received. I think it's moving into the pipeline. I know some guys actually took advantage of some of the carry that was in the market and moved out to May already or moved out to July. So I do think that there is a lot of supply in the pipeline just because of the sales that were made. They know it's coming. And I have a feeling that's why some of the basis levels have been still pretty firm. Here, we haven't really seen that come into effect because I think that guys are making the sales. So when it comes down to it at the end of the day for quarterly stocks or what's actually on hand, I wouldn't be surprised if it's actually a bit lower than what they're thinking right now.
Yeah, but to your point, we've been holding these support areas, beans down at the 50-day moving average, and corn has been holding some key moving averages too. So we just got to keep doing that, right?
Right, exactly.
Yeah.
Technicals are going to be very important here moving forward.
You got it. Okay. Cattle this morning a little higher, hogs a little bit lower. Yesterday, it feels like we were the opposite direction because we thought Canadian and Mexican tariffs were going to get delayed. Is that what we're trading this morning as tariffs, or is there more to it?
Yeah, I think it just flip-flopped of what we were seeing yesterday. The rumor mill was going, but today we actually got some printed headlines of the opposite. And I think that's exactly what flipped that spread action that we were seeing. And cattle have been really strong. It just seems like that market is not afraid of a pullback coming anytime too soon. We did get a good pullback though in feeder cattle here just recently in the last 2 weeks going into the end of the month. But yet we actually held lows from February. And I think it was, again, trying to find a level of support. And once it found it, we did get another boost to the upside. So there is a possibility that those highs or new highs could be on the table just from that fact alone. It's all technical. Unfortunately, though, we don't have a whole lot of fresh news behind it. We're still trading the same fundamentals that we have been on the cattle side. So it'll be interesting to see what actually pushes it if we do make new highs here. I think it is going to take something new and fresh to do that. Tariffs, I don't know if that'll do it, or who knows what else could actually hit the market. Black swans are always overhead.
Yeah, I feel like in the cattle, though, if you get the cash to stabilize and go back up, the futures aren't going to have any choice but to go up, are they?
Exactly. It's been following cash very closely, and I don't foresee that changing.
You bet. All right. Thanks so much, Allison Thompson with the Money Farm. That is Markets Now.